Welcome back to Wall Street Podcast. Today, we're doing a deep dive into a topic that's, well, rapidly reshaping industries and investment landscapes, artificial intelligence. Specifically, its profound impact on advertising profit pools. We'll unpack key insights from a recent Goldman Sachs report analyzing the impact of AI on advertising profit pools, Part 9 from June 2025. You'll walk away understanding the massive capital flows, the evolving workflows, and importantly, the significant disruptions and opportunities AI presents in digital advertising.
Exactly. And for our listeners, where knowledge is currency, and let's face it, time is precious, this deep dive is really your shortcut. It's about understanding not just what's happening, but why it matters for market growth and, of course, investment strategy. Okay, let's unpack this.
Right. So to really grasp AI's transformative grip on advertising, I think we first need to appreciate the sheer tectonic shifts in capital it's driving. The scale of investment is, well, it's staggering.
It truly is. We're talking about U.S. hyperscalers. The tech titans like Google, Amazon, Microsoft. They've already spent an estimated $477 billion in capital expenditure just between 2022 and 2024.
477 billion.
Yeah. And that figure is projected to explode.
What?
We're looking at reaching maybe $1.15 trillion in the period from 2025 to 2027.
Wow. Over $1 trillion.
Exactly. And here's the crucial insight, the thing to really focus on. AI's unprecedented capital intensity. I mean, this isn't just that familiar story of, early losses yielding outsized returns later. It's a massive barrier to entry. So we're likely to see returns concentrated among a very select few hyperscalers. It really amplifies those winner-take-all dynamics we've seen before in tech history.
Okay, so this immense investment, this $1 trillion, where is it actually playing out right now? How is AI being integrated into the core mechanics of digital advertising?
Well, it's getting implemented across a really broad spectrum. Think content creation, AI assistance, content recommendations, optimization engines, campaign execution, even modeled conversions. But the most successful current examples where these applications combine into one product, that's Google's Performance Max, or PMax, and Meta's Advantage plus A plus Go.
PMax and A plus Go.
Right. These products are incredibly powerful because they automate so much. Campaign execution across different formats, deep personalization, really granular user targeting, and increasingly they're leveraging generative AI for the actual content creation side too.
And the adoption rates for these platforms, they must be quite telling, right?
Oh, absolutely. The Goldman Sachs report, it cites Sky data, shows remarkable growth. For Google PMax, adoption by U.S. advertisers just soared. It went from only 2% in Q4 2021 up to 59% by Q4 2024.
Huge jump, 59%.
And the total U.S. Google spend going through PMax increased from 6% to 46% in that same time frame.
Nearly half of the spend.
Yeah. And Meta's Advantage Plus shows similar traction. Adoption grew from 13% in Q1 2023 to 36% in Q4 2024. Total U.S. Meta spend through A+, hit 33% by Q3 2024. So this rapid adoption, it isn't just remarkable growth, it feels more like a critical mass event. It signals that AI-driven automation is fast becoming, well, table stakes for major advertisers. And it deeply locks them into these walled garden platforms, those ecosystems where they control the data and the ad channels. It's fundamentally redefining how ad budgets get allocated.
Okay, so beyond these specific products, PMax and A plus B, how is AI fundamentally changing the day-to-day, the daily operations, the strategic thinking within the ad industry? Let's break down those core workflows.
Right. This is where AI's transformative power really shines across the industry. It's re-engineering 4 key advertising workflows. First, campaign planning and strategy. Currently, that involves human strategists, meticulously analyzing market trends, competitor moves, customer data.
It's a traditional approach.
Exactly. In the AI-enabled future, AI automates a lot of this, identifying target audiences, finding the optimal channels, making budget allocation way more efficient. So humans pivot. They move to higher-level strategic thinking, creative development, the impact, faster campaign development, much improved targeting, and a greater slice of ad spend going into the highest-performing channels.
Okay, so humans move from data crunching to more strategic roles. Makes sense. But if AI handles the planning, what about creativity? Does human creativity still reign supreme in ad development, or is that also being re-engineered?
That's a great question. For creative development, which traditionally is very labor-intensive, very costly, generative AI is a game changer. The AI-enabled future sees generative AI using all those insights, that first-party data, to develop personalized, high-performing ad copy variations, even novel content.
So personalized ads at scale.
At massive scale. And the impact here is profound. You get hugely increased creative output, those personalized ads, and dramatically reduced production costs. This effectively democratizes advertising.
Right.
It empowers potentially millions of smaller businesses. That expands the total addressable market and increases auction density on the platforms. So yeah, maybe fewer endless rounds of revisions with clients, perhaps a marketer's dream.
Perhaps. Okay, that's a powerful shift. And what about the actual buying and optimizing of ads?
Right, media buying and optimization. This used to involve a lot of manual bidding, placement decisions. Now, AI-powered programmatic platforms automate the buying. They optimize bids in real time, target with much greater precision using user behavior, contextual factors, campaign data, all of it.
Leading to more efficiency.
Increased efficiency, absolutely, and improved ROI on ad spend. And crucially, those cost savings. They often get redeployed right back into marketing spend, which, given their efficient channels, primarily benefits those walled garden platforms again.
Right, reinforcing their position. Okay, finally, how does AI fit into the crucial aspect of customer relationships, CRM?
Customer relationship management and personalization. Here, the AI-enabled future fundamentally changes how companies interact with their customers. AI analyzes individual preferences, behaviors, purchase history, all to deliver hyper-personalized recommendations, offers, content. You also get AI chatbots providing instant customer support. The impact: dramatic improvements in customer engagement, increased loyalty, and ultimately higher conversion rates across literally all touchpoints.
Okay, so this shift, it's clearly not just about efficiency gains. It's really about reallocating massive profit pools.
Mhm.
So what does this all mean for the existing advertising channels and players within them?
This is where we see potentially significant disruption. First, there's an accelerated shift to digital channels. Our base case expects digital ad spend penetration to increase by about, say, 170 basis points annually. That's 1.7% from 2025 to 2028.
Okay, steady growth.
But an AI scenario suggests that digital penetration could actually surge by roughly 350 basis points annually. That's 3.5%.
Yeah.
That aligns more with the growth we saw pre-2020. The implication here is profound. AI could drive an incremental, an extra $170 billion of total ad spend towards digital channels just between 2025 and 2028. It fundamentally reshapes the landscape. Digital isn't just eating the world, AI is basically supercharging that process.
Wow. An extra $170 billion moving to digital? Okay.
Mhm.
What about the costs tied to actually creating the ads?
That's the second major disruption: ad creative generation costs. Generative AI is dramatically lowering these costs. The report identifies an approximately $114 billion profit pool at risk from this shift.
$114 billion at risk.
Yes, but it varies a lot by channel. For search ads, it's basically 0%. But for things like high-value linear TV or rich media where creative production is traditionally super expensive, it could be up to 30% of that value pool.
Right, makes sense. And the intermediaries, the ad tech ecosystem players.
AI also has the potential to lead to consolidation or disruption of third-party ad tech intermediaries. This represents roughly a $25 billion profit pool that's based on about 20% of the digital ad spend outside the major platforms that's currently captured by these intermediaries.
Yeah.
As the walled gardens integrate more and more AI-driven capabilities internally, the need for some of these external layers might just diminish, essentially disintermediating the middleman.
Okay. And finally, the traditional ad agencies, those long-standing pillars of the industry, are they safe from this re-engineering?
Not entirely, no. AI could significantly disrupt the role of traditional ad agencies. We're talking about a substantial $161 billion profit pool here.
$161 billion.
Yeah. Now, the major global agencies, your Omnicoms, Interpublics, WPPs, Publicis, Dentsu, they come for around $64.5 billion of this. But the report suggests the remaining 60%, that long tail of smaller, independent agencies, is considered most at risk because AI's automation of workflows, from planning to creative to media buying, directly impacts the core services these agencies have traditionally provided.
It's easy to focus on the disruption, and clearly there's a lot of it. But AI must also create entirely new avenues for growth, for monetization and advertising. What are the key emerging opportunities here?
Absolutely. While disruption is a key theme, AI simultaneously opens up significant new growth opportunities. It's not all doom and gloom. One major area is improving the return on ad spend, or ROAS, of existing channels. AI has the potential to significantly enhance the returns advertisers achieve. For example, Meta's been public about this. Their Advantage plus shopping campaigns drive significantly higher ROAS compared to traditional campaigns.
Right, and this improved ROAS, as you mentioned before, creates a kind of virtuous cycle, doesn't it? More efficiency translates directly into potentially greater spend.
Exactly right. That improved ROAS creates this positive feedback loop. It unlocks larger advertising budgets because advertisers are seeing better returns, so they redeploy that money back into these higher-performing AI-enabled channels.
Makes sense. What else?
Another big opportunity is the democratization of advertising we touched on earlier. This expands the whole addressable advertiser base. By automating so many aspects of the advertising value chain, AI lowers the barriers to entry. This allows potentially millions of smaller businesses to now effectively advertise in channels or formats that were previously just too complex or too costly for them. So it drastically expands the total market size.
Okay. And what about entirely new ways to advertise, new formats?
Yeah, that brings us to the introduction of new ad formats. AI has the potential to fundamentally change how consumers interact with online platforms. It could create entirely new types of interfaces and services, and we fully expect advertising to remain a primary monetization model for this AI-powered web.
Yeah.
But it will likely manifest in novel ways.
Like what, for example?
Well, think about sponsored AI chat results. You ask an AI assistant a question, and it might recommend products or services directly within that conversation. Monetization will probably also extend into AI-powered enterprise and creator tools, maybe through premium AI agents or specialized features. And of course, we'll see even more sophisticated, personalized content that dynamically adapts to individual users, making the ad experience feel hopefully more native and valuable, less intrusive.
Okay, let's peel back a few more layers now. Let's explore what these findings really imply for strategic decisions, for investment theses. So, given the substantial capital expenditure required for AI development, you mentioned hyperscalers projected to spend potentially $1.15 trillion by 2027. How does this long-term investment strategy align with that historical idea of outsized return profiles after early losses, especially when, as you noted, AI is much more expensive to build and scale?
That's a really fascinating point. Because while that investor narrative, endures early losses for later outsized returns certainly applies here, AI's unique cost structure adds a twist. It's significantly higher cost and capital intensity compared to previous tech transitions. It introduces a new layer of consideration. It suggests that while the potential returns are substantial, the path to profitability, the ROI on these massive AI bets, it might just be longer, and perhaps more challenging to achieve across the board than in past cycles. It also implies that these returns could end up being even more concentrated among the players with the absolute deepest pockets, the biggest capital reserves, which further reinforces the competitive advantages for those few who can make and sustain these enormous investments. It really is a high-stakes, long-game play, heavily favoring the biggest players.
Right. Okay, and the report highlights AI's potential to accelerate that shift of ad spend to digital channels, that incremental $170 billion by 2028. How does this significant shift impact the competitive landscape? Traditional channels versus the walled garden platforms like Google and Meta, and what are the implications for that? $25 billion third-party ad tech intermediary pool and the traditional agencies.
Yeah, if we connect this to the bigger picture, that accelerated shift overwhelmingly favors the walled garden platforms.
Oh.
It just does. AI-driven efficiency in media buying means advertisers see better ROAS within these platforms, right?
Yeah.
Which in turn encourages them to redeploy their cost savings and any incremental budget directly back into those same highly efficient channels.
Doubling down on what works. Exactly. And this intensifies the pressure massively on traditional advertising channels and those external players. The report specifically points to that $25 billion profit pool for third-party ad tech intermediaries being at risk, and that massive $161 billion pool for traditional ad agencies. And critically, as we said, about 60% of that agency profit pool, the part not currently attributable to the major holding companies, is deemed the most vulnerable. So this acceleration means a really profound competitive reshaping, funneling spend towards more automated, integrated, directly managed platforms, and ultimately consolidating power with the tech giants.
Okay. Final question here in this deeper dive section. Beyond efficiency gains, cost reductions, how significant is the democratization of advertising driven by AI in terms of actually expanding the market? And looking forward, what new monetization models might emerge from these AI-powered interfaces, given that advertising is still expected to be the primary model? Well, this raises an important question about market expansion, and I think the democratization aspect is hugely significant. because AI effectively lowers barriers for potentially millions of smaller advertisers. People who previously found traditional or even complex digital advertising inaccessible, maybe just too expensive. This drastically expands the total addressable market for the ad platforms themselves. And it also increases auction density, which benefits the platform's bottom lines.
Right, more bidders.
Exactly. And looking forward, as AI fundamentally changes how consumers interact with information, with services, new monetization models will definitely emerge, even while advertising keeps its core role. We can anticipate, as I mentioned, novel ad formats like sponsored results within AI chats, where assistants might recommend things directly in the conversation. Monetization will also almost certainly extend into AI-powered enterprise and creator tools, maybe premium AI agents, specialized features, and, of course, highly personalized content dynamically generated, optimized by AI that will also present new advertising opportunities, hopefully making the ad experience feel more native, more valuable.
What a deep dive, seriously. From the trillions in capital expenditure shaping AI's future to its really granular application in digital ad campaigns, automating workflows, and the significant reallocation of profit pools we've discussed, AI clearly isn't just a buzzword, it's a fundamental economic force. We've seen how it's streamlining operations, democratizing access, and creating entirely new avenues for growth and monetization.
Indeed. What we're really witnessing here isn't just an evolution. It feels more like a fundamental reengineering of market dynamics
Uh-huh.
and strategic foresight on AI adoption. Understanding these shifts, that's going to dictate who captures the lion's share of future value creation. It really is critical.
Absolutely. So as we wrap up, what stands out to you from today's deep dive? And for you listening, as AI continues to evolve at this incredible pace, consider this. What surprising new AI-powered ad formats might we see emerge, maybe even the next 12, 18 months, that could fundamentally redefine how consumers interact with brands and information, opening up even more profit pools for Wall Street? Something to think about.